All right, we're going to get started so that we have enough time today. Welcome to today's webinar, NYC Accelerator PACE Financing Training for Engineers and Auditors. We have two housekeeping items before we get started. First, please note that this webinar is being recorded so we can post it online after the event is finished. We'll send out the recording link later today. Second, all attendees today will be muted until the end. If you have questions during the training, please direct your questions to the chat box on the right side of your screen. We'll have some time at the end to answer questions. Our speakers today are Andrew Chintz, Financing Specialist for NYC Accelerator. Andrew develops and implements programs at the intersection of finance and energy efficiency. He brings a seasoned career spanning 30 years as a senior level municipal and real estate finance expert, including 24 years in diverse roles at MBIA, a municipal bond insurer. We have Peter Erwin, Associate Director of NYCEEC. Peter manages the day-to-day operations of NYC Accelerator PACE Financing, New York City's commercial property assessed clean energy platform. And we will hear from Patrick O'Donnell later today once we get to the Q&A portion. Patrick is the Director of Engineering at NYCEEC. Patrick provides technical due diligence, risk management, and construction surveillance for loan transactions. Patrick assists in the development and implementation of NYCEEC's policies and best practices with regard to energy efficiency and building technologies. So we have a great panel here today, and at this point, I will hand it over to Andrew Chintz.
Thank you, Natasha. Good morning, everybody. Before Peter gets started with the workbook training, I just wanted to provide everyone with a brief introduction to the New York City Accelerator. New York City passed the Climate Mobilization Act, which included Local Law 97, which requires building owners to meet periodic carbon reduction thresholds in their building. The CMA also provided for Local Law 96, which authorizes New York City Accelerator PACE Financing as a way to pay for these improvements. And so through the city, the Mayor's Office of Climate and Sustainability, NYCEEC is authorized to administer the New York City Accelerator PACE program, and Mayor's Office also established the New York City Accelerator program to help building owners and decision makers to meet the Local Law 97 requirements. So basically, the Accelerator is a free service to building owners and decision makers. It's customized to meet individual building owners' needs, and we have a staff of people that are available to help you with everything from determining what your penalties would be under Local Law 97, helping you plan and implement a work scope to meet the requirements of the law. It includes connecting you with service providers, directing you to incentive programs. We also provide operator trainings for workforce development. And, you know, in addition, we would help you with your financing needs, including New York City Accelerator PACE. You can go to the next slide. So who's eligible for to use the Accelerator? Any building that's greater than 5,000 square feet can access the Accelerator for their services. As you probably know, Local Law 97 is a requirement for buildings 25,000 square feet or greater, so we've gone deeper in our services. But if it's smaller than that, we won't, be working with you, but we can refer you to other partner organizations. And the way it works is you just contact us. We have account managers that work directly with you. They're divided into different building tracks. That we have different sections for existing buildings, new construction, affordable housing, high performance. So we would set you up with an account manager. And then also we have specialists to help in certain areas such as financing or solar feasibility. And again, there's no cost to this. So yeah, when you are looking to do the financing and access Accelerator, New York City Accelerator PACE Financing, you would come to us, and we would help. Primarily myself as the financing specialist would help you understand PACE, determine if it's a good fit for your building. It doesn't work for every building, and then just basically engage you in the process and help you navigate. And as I say, it's not a fit for every building. We would also help you access and identify other financing sources when PACE isn't a fit. Probably most of you are familiar with PACE at this point, but for those of you that are still kind of getting up to speed, just a couple comments on what it is. It's basically a new application of an old idea. It's a municipal finance tool that's been used for hundreds of years. I think Ben Franklin was the first one to use it. It's using tax assessments to finance public improvements, things like water and sewer districts, improvement districts, redevelopment. And you know, the difference here is that we've determined that reducing greenhouse gas emissions is a public improvement, just like these other public improvements that are financed this way. So we're with these legislations that's enabling PACE, we're allowing this type of financing to be used for this public purpose. But the difference is there's no district. It's an opt-in for individual buildings, but it works the same way, where the tax assessment is there's financing, and the tax assessment pays back the financing through the a line item on the tax bill. You can go to the next slide. So just quickly on the benefits, it's 100% financing, fixed rate, non-recourse. It's long-term financing. It's based on the weighted average life of the improvements. It can go 25, 30 years or more. And the key to that is that by stretching out these long-term payments, you hopefully have energy savings, and those savings could actually be sufficient to not only cover the cost of the loan payments, but even increase cash flow. Obviously this is something that positive to greenhouse gas reduction, and these improvements will help you with compliance with Local Law 97. It reduces your energy expenses, which in effect increases your net income on the building and leads to higher property values. And a key feature of PACE is that because it's a tax and not a loan, well, it's a financing, but it doesn't get accelerated. It can get transferred when you sell the property, and the new owner simply pays the tax and enjoys the benefits. And one thing with New York City PACE is that you can do retroactively use PACE to finance improvements that were done up to 3 years earlier. This is just a kind of a roadmap to just show again how Accelerator helps building owners access PACE, New York City Accelerator PACE financing. So the owner would come to Accelerator, they'd be assigned an account manager, they would bring in the financing specialist, myself, to help explain PACE and determine if it's a good fit, and then we would help you access the various lenders that have been approved by NYCEEC to be a lender to finance your project. We would stay involved to the extent you want as a third-party resource to help you analyze or assess your options. And so from there, the PACE lender works with NYCEEC. There's an application which gets approved and an underwriting process with the lender that then ends up with the loan closing, and NYCEEC would then make sure that the tax charge would get put on the tax bill with the Department of Finance, and that gets charged to the building owner twice a year on their tax bill. So that is all I had to just introduce you to Accelerator, and I will hand it over to Peter.
Thanks, Andrew, and good morning, everybody. I'm Peter Erwin. I'm an associate director at NYCEEC. Just to say, NYCEEC is a green bank founded by New York City in 2010. We serve two main functions. We accelerate the adoption of clean energy in buildings by financing projects directly, and we advance the field by working with other municipalities to establish local green banks like ours. We work specifically with the New York City Mayor's Office of Climate and Sustainability on policy, and one of those important policies is the NYC Accelerator PACE Financing program. So NYCEEC is the administrator for Accelerator PACE Financing. We help to ensure lenders are qualified to provide PACE financing in New York City and review the technical aspects of projects to make sure that these projects are delivering on greenhouse gas emissions and utility bill savings for building owners. Just in terms of the purpose of my portion of the presentation, Andrew gave a great overview of the program. I'm going to describe the parties that are involved in each PACE closing and some of the resources that are available for each PACE transaction. We will hone in on the technical review process using the Technical Certification Workbook. And then once we cover the submission requirements, I'll also give a sense for what NYCEEC does with that information and how long our review is intended to take so that building owners and lenders can get smoothly to a closing. Just want to note before we dive in that my presentation will focus on a hypothetical renovation project where the fee owner of an existing building is obtaining PACE financing for installing energy efficiency measures. But PACE is also available to finance renewable energy projects on existing buildings, and in 2022 we expect that PACE will be available to fund certain measures within new construction projects and in other types of ownership structures. So briefly, the parties involved. There's the building owner, who is the borrower of the PACE loan and the beneficiary of the energy audit and the energy improvements that are installed. For my presentation, think of a mid-size 50-unit market rate residential co-op building. It's covered by Local Law 97, and it is facing penalties if it does not install more efficient systems in the coming years. But this could be anything all the way up to a Class A office tower. There's the New York City Accelerator that Andrew described, working with the building owner to offer free advice on developing the project. There's an energy consultant. So this consultant, typically an engineering firm, will be providing an ASHRAE Level 2 energy audit in support of any energy efficiency measures that are proposed for PACE financing. This energy consultant might also be providing a feasibility study supporting any renewable energy measures that would be proposed. The energy audit requirement in New York City is ASHRAE Level 2, so this ensures that the energy auditors are going out and inspecting the site, reviewing utility data, and analyzing the site energy use by fuel type to recommend opportunities for improved efficiency. Third party to bear in mind is the PACE lender, so they must be pre-qualified to provide PACE financing in New York City, and a list of those firms is available on the program website that we'll see in just a moment. Finally, NYCEEC. We will be working mostly behind the scenes to ensure that qualified lenders have this platform to offer to their customers, and will conduct the technical review of projects using the Technical Certification Workbook that we are about to observe. I don't have any slides today, but I'm about to share my screen, so you won't have to just watch me the whole time. I want to just list out some of the resources that are available to projects, and then we'll look at the workbook. So I'm going to share my screen now and for the remainder of the presentation. So this is the program website. I hope everybody can see that. This is available at nyc.gov/PACE. Just want to note that the list of qualified PACE lenders is here toward the bottom of the website. This list will grow as additional lenders join the market. But want to highlight that there's a great list here, and it's a competitive marketplace, which will hopefully over time help interest rates and terms for borrowers. A couple of resources toward the top of the page. There are the program guidelines, which I'll speak about in a moment. There is an FAQ and sort of a what is PACE financing beginner's document for those interested in PACE financing. There is a request for qualifications for lenders seeking to become pre-qualified lenders and an application, and then more information about program fees, and the final document here is the Technical Certification Workbook. A couple things that aren't pictured on this website. So NYCERTA, the state agency, also publishes guidance around PACE, and you can think of this like nested dolls. The NYCERTA guidance is published for any municipality across New York State that has a PACE program. New York City's program has to fit within that box, but may be more specific in certain areas. So if you download the New York City program guidelines from the website, those guidelines will link to the NYCERTA guidance where necessary, and you'll understand the relationship. It's important to have both sets of guidelines available when developing a project. Two other things. So there will be a closing checklist that I think will be helpful to all projects seeking PACE financing. When a new project has a signed term sheet and enters the pipeline, so to speak, NYCEEC will be notified of that project. We will circulate to the lender and then to the borrower a closing checklist that will lay out everything that's required for the closing, including the technical certification and the workbook. Finally, we'll be focusing on an Excel document today. Just to give a sense for how the closing works, as part of the application, the energy audit firm that has been retained will provide to the administrator, NYCEEC, a signed certification form representing that they have performed work in accordance with the ASHRAE Level 2 audit standard, and that they have accurately summarized those findings in the attached workbook. So we'll focus on the workbook. The application requirement is actually a signed form with the workbook attached. And now we will dive a level deeper. So I'm going to kind of walk through inputting information related to a hypothetical project into the workbook for submission to NYCEEC for an approved project. So I would start here on the website and download the Technical Certification Workbook. This is what the form looks like. I'm going to briefly walk through the 5 tabs at the bottom, and then we'll go back through everything and input the data. Just want to say that this is a locked Excel form, so the user is expected to populate the cells that are highlighted in white. The form of this workbook may change over time. As long as you are using the version that's downloadable from the program website, you'll be in good shape. Of course, you could reach out to NYCEEC at any time to confirm any specifics. So just to describe these tabs, there's a summary of findings. It's important to input the site address. Other than that, all of this data will populate based on other inputs in the workbook. And at the end of the completion of this form, this will be a resource for the borrower or the building owner to understand the energy savings, the associated cost savings, and any other financial benefits, including avoided penalties under Local Law 97 on this summary sheet. So we'll take a look at that a little bit later on. The second tab is an SIR, or Savings to Investment Ratio test. This tab does not get populated by the user, but will calculate automatically based on other inputs. So you can see there are 3 main types of savings. There are energy cost savings directly related to the measures that are installed. There are annual Local Law 97 savings. This is expected penalties that would be avoided by installing the more efficient systems. And then there are annual other savings. For a description of what types of other savings can be considered appropriate for a PACE project, you can refer to the NYCERTA guidance. These are things like operational and maintenance savings that are gained by the building owner by installing more efficient and newer systems and other related benefits. The third tab is the construction scope. So as part of the application, the lender on behalf of the owner will be expected to upload a contract with a general contractor to perform the work that would include a construction scope. This tab is intended to list out all of the hard and soft costs that are funded by the PACE loan, and then categorize them using prescribed lists, as we'll see in a moment. The other inputs on this tab, just to go through quickly, are the proposed loan term. Now, under the guidelines, the term of the loan cannot be longer than the estimated useful life of the equipment installed, which we'll talk about on the next tab. And then you would input an estimated construction completion year for the purposes of calculating the savings to investment ratio. After completing this tab, you want the PACE financed amount to be the hard and soft costs within that PACE loan, netting out any capitalized fees or interest, capitalized interest periods. We'll go through this again in a moment, but once measures are input in column C here, the construction scope measure, you would go through the rest of this tab and specify the capacity of the system, the quantity, and the unit cost in order to get a total cost. And then the last column, column R, is the effective useful life. And these terms are all described in the program guidelines, so you should have that on hand as you work through this workbook. The next tab is meant to summarize the savings analysis that was presented also in the accompanying energy audit. So here you would input the baseline energy use of the building, trailing 12-month consumption numbers, and blended utility rates in columns E and F in the table at the top. Then, as we'll see in a moment, the measures from the construction scope will pre-populate here, and you would assign to each measure savings based on the type of fuel use and any other related savings or benefits that go along with those measures here in column R. Again, we'll see what this looks like in just a moment. The last tab is the local law 97 analysis. So users here are required to input the gross floor area of the building by occupancy group. These occupancy groups are defined and can be found online through the Department of Buildings. And so after the gross floor area is populated, the user would get a sense of the expected fines under local law 97 and any avoided fines based on the energy savings built out on the previous tab. This calculation is really similar to the Building Energy Exchange's local law 97 compliance calculator. You can use either tool and you should get the same result. So that gives you a sense of the Technical Certification Workbook. I'm now going to run back through the document and input some project data to see if we can get a result. Okay, I intended to design a fictional building, and I've just learned that this building does exist, 123 Avenue A. Every other piece of information will be fictional, and I apologize if you live at 123 Avenue A. On the summary tab, you're just putting site information. And as I said, we'll come back at the end of the presentation to see this tab populated. We'll skip over the SIR tab and move on to the construction scope. All of the data that I'm inputting here would be mapping to the construction scope in the general contractor's contract and the energy audit. In this case, we'll assume a proposed loan term of 20 years. Again, part of NYCEEC's review will be to check that that loan term is less than or equal to the weighted average useful life of the equipment that we are also. And we'll assume for now that construction is expected to complete in 2022. So the sheet allows for 99 measures, which I realize is a bit excessive. The data will be summarized at the bottom of the worksheet. For expediency today, I'm going to describe 3 measures. The first would be a whole building LED lighting retrofit. So I'm going to input in column C the name of the measure as it appears in the construction scope. And then I'm going to use drop-down lists to populate the rest of this row. So for measure type, you have the option to indicate whether it's an energy efficiency improvement, a renewable energy system, or an ancillary measure. Again, if you want the definition of ancillary measure, you can reference the NYSERDA guidance. These are hard and soft costs that are required in order to install the energy efficiency or renewable energy improvement. So I'll click energy efficiency. That means that a few other fields become highlighted, and I apologize, I was just playing with this workbook earlier. Now that you have these cells highlighted, you would go through and select from the drop-downs additional information to describe the measure. So this is 12 lighting. I'm going to go to a drop-down here and select replace lighting fixtures with LED fixtures. And then it asks you to reference this measure in the energy audit. This is an optional field. We want to make sure that this document maps to the energy audit provided, so it's helpful to NYCEEC as the reviewer if you can indicate that, yes, this is measure number 1 in the energy audit. Just to spend a moment on these drop-down lists, the language in these lists, if you're familiar with BEADS compliant, is compliant with the data dictionary published by the Department of Energy and also used by the city's Department of Citywide Administrative Services. So it's really important to us that all of the measures installed using PACE financing are documented using the data dictionary provided here. That way we can compare results across projects, report to the city more effectively, and hopefully really start to advance the industry by gathering important cost and savings data on installed measures. I'm just going to go through and finish this row, so you can choose a location in the building. You're welcome to choose whole building. Capacity and unit capacity are optional fields. If you are installing a high efficiency boiler, for example, or another type of system, you might want to populate these fields. I'm going to go through and leave those blank and indicate that this is a single project at a cost of $100,000. Once I have a unit and a unit cost for each measure, a total cost will populate, the PACE financed amount will begin to populate, and then you'll also want to input an effective useful life from the energy audit. So I'll go back and do this for a few other measures. Let's assume that in addition, the co-op building has decided to install air source heat pumps for all of the units. So we can write in feedback as it appears in the scope of work. And then again, go through and select the options from the drop-down list that describe this measure. like I mentioned, we want to see all of the costs itemized here, so you can also put in soft costs like the energy audit, which is financeable. PACE is intended to be 100% financing in certain cases. And you would just call that an ancillary measure and be sure to input the quantity and unit costs. Under the NYCERTA guidance, soft costs that are eligible, like the energy audit, can be assigned up to a 5-year useful life. So this shouldn't damage the expected useful life for purposes of the PACE loan term because of the low cost, but you also. So now we have a weighted average useful life of 22.5 years. It's important to recognize that the proposed loan term is within that. And we have a total of PACE finance amount of $315,000. I'm going to go now to the savings analysis tab. So you can see that the measures I input on the construction scope tab have pre-populated here. I'm going to start by inputting my baseline energy use data, and this again should match what's in the energy audit. Let's assume that the existing building is consuming natural gas for heating and cooling and electricity for lighting, and shows the associated kWh and therms usage with the utility rates of 20 cents a kilowatt hour or $1 per therm. Now you'll note also in this table at the top that the associated greenhouse gas emissions in metric tons of carbon dioxide equivalent are calculated using coefficients from Local Law 97. Right now, these coefficients are the same whether you're in the 2024 or 2030 compliance year. That might change, and if it does, this workbook will be changed in accordance with that change to the law. But for now, you get a sense for the annual associated emissions, carbon emissions with the building's current operations. Now that we have a baseline and the scope measures identified, we'll associate changes in fuel use with each measure. So the whole building LED retrofit is expected to generate 100,000 kilowatt hours saved per year. You can see that now the total projected energy savings and cost savings will populate based on the baseline information input at the top. For heat pumps, there will be a net increased use of electricity. The building will no longer rely on natural gas. So you can see there are net savings there. And in addition, there may be other annual savings based on the installation of newer and more efficient systems. Let's say the energy audit develops appropriate savings to operations and maintenance of around 1,000 a month. So on the savings tab, and just document where that's located. So when NYCEEC circulates to projects a closing checklist, there will be an allowance for documentation of other types of savings in addition to what's developed in the energy audit. You would document that using an index file name that we provide and just make a note of that here. I have to hope I've got the inputs right, and you'll see the project benefits, and again, those are summed at the bottom of this worksheet. Lastly, we're going to populate the Local Law 97 tab. Apologies. So let's assume this building is a 50,000 square foot building with 40,000 square feet of residential space. And and ground floor retail of 10,000 square feet. Sounds like a typical co-op. Again, you can find this information through the Department of Buildings online. Once the gross floor area calculations are input here, the chart will use the emissions intensity limits from Local Law 97 to calculate proposed and avoided penalties in this table to the left. So I'll just walk through this very quickly. The existing annual building emissions for both compliance periods are calculated as 444 metric tons of carbon dioxide equivalent. Again, that was from the savings analysis tab. The existing annual buildings emissions intensity is calculated by dividing the number above by the square footage, and then you get a buildings emissions limit. Again, you can see how this gets stricter in the 2030 compliance period. Based on existing consumption, the building would be above the limits both for the 2024 and 2030 compliance periods. In the earlier period by 89 metric tons and later by 236 metric tons as that limit reduces. The chart then applies the penalty rate of $268 per metric ton to show that the building would be projected to be penalized $23,000 per year starting in 2024 and later $63,000 per year in the 2030 compliance period. We'll then assign a value of to the potential fines avoided by converting the energy savings from the previous tab into carbon savings. Now, the building would be allowed to credit up to its full penalty load as a savings for the purposes of the savings to investment ratio test. You can see that in between 2024 and 2029, the savings from the project more than outweigh the projected penalties, and therefore the building could offset its full annual penalty of $23,855. In the later compliance period, we've calculated that the measures installed would offset $49,000 worth of fines, but the building would be projected to face $63,000. The building can then count that $49,000, but not the total penalty amount toward its savings. So we've now gone through the workbook and populated all of the inputs from the energy audit, and we can go back and take a look at the summary and make sure that we have a positive savings to investment ratio. So 3 important things here. This worksheet will summarize the total energy savings, 54%. Again, you have a net positive change in electricity use, but you're removing natural gas from the building. You then have a chart displaying, translating the energy change into energy cost savings based on the utility data provided. So a 10% reduction on utility bills. You have associated savings like operations and maintenance, $12,000 or $1,000 per month. And you have Local Law 97 savings for both the 2024 and 2030 compliance periods. This summary tab is meant to be a resource for the building owner to understand the potential benefits of the project. Of course, by approving a project for a PACE loan, we're not guaranteeing that the owner will see these savings. These are just projections, and the owner should compare the projections to the actual data over the life of the measures installed. The final tab that I'll finish on is the savings to investment ratio tab. So here, the workbook has shown the annual projected savings for every year during the permanent loan term, so starting with construction completion in 2022 and going out 20 years. You also have avoided Local Law 97 savings for the compliance periods that are known now, so that would be the 2024 to 2029 compliance period, avoiding that whole penalty load of $23,855, and then the 5-year compliance period starting in 2030, where the project would be projected to avoid around $50,000 of its $60,000 fine. Then you have other savings, again the $12,000. There's an inflation adjuster here, growing that savings over time during the loan term. So you get an estimate of total savings that can be expected by installing these measures. Now the workbook is following the NYCERTA guidance here and creating or calculating a net present value of all of those savings over the 20-year term using a discount rate of 3%. That's how you get your present day savings number. That has to be divided by the PACE financed amount. Again, that was shown on the construction tab. And as long as that ratio is greater than 1, this project would be projected to be approved for PACE financing. So this is a completed workbook. I'll just spend a moment on what happens next. The energy auditor would complete this workbook using data from the energy audit. They would then sign the required energy auditor certification form, append this workbook, and submit both via the lender to NYCEEC to review. NYCEEC would review the energy audit and this technical certification workbook. We want to make sure that the energy audit confirms with the ASHRAE Level 2 standard, that the inputs are accurate and mapped to the construction scope. And we want to understand that the savings projected are reasonable given the NYCERTA guidance and calculated using prescribed methodologies based on ASHRAE and other resources. NYCEEC may reach out during this period with any clarifying questions to the project team, whether that's the lender or the energy auditor. We could have one or several follow-up calls, and we'll be working in earnest to resolve any questions and ensure that the data provided in the workbook is accurate. Once the engineering and other reviews of the proposed project are complete, NYCEEC will issue a notice that the project has become an approved project, and at that point documents will be sent to the city for signatures. Again, this is all laid out in the program guidelines. Project teams can reach out to the administrator contact, which will generally be me, or you could email pace@nyceec.com at any time during the closing. We hope that this would be concluded within a matter of weeks, not months, over time, although I'll note that the project is in very early days. And then the borrower and lender would close on PACE financing and the project would be installed. I'm going to stop sharing my screen. Before we open up to any questions that were input in the chat, I just want to say that we continue to be in a pilot phase of this program. I think it's likely that this workbook could be updated, so I would encourage everyone to keep checking in with the program website and look out for new construction guidelines and other improvements to come in 2022. So happy to be joined by my colleague Patrick, and maybe Patrick and I will go through a few of the questions that have appeared in the chat.
Sounds good, Peter. We do have a few questions in the chat. I'm just going to go through those in order which we received them. We got a question from Griffin. For many of our ongoing projects, we're using a 2019 as a baseline year pre-COVID. Is that acceptable for this mission? So we do request the trailing 12 months of data sort of leading up to the development of the energy audit as a default. You know, it depends a little bit on the building. We are looking at the baselines. We saw, you know, based on data for buildings we financed, we saw buildings that increased usage during COVID, others that decreased. So I think it would be prudent in a lot of cases to use the pre-COVID data. I guess more broadly, we really need to understand what our best understanding of the typical baseline usage will be on a go-forward basis as best as we can. The next question from Ryan: ancillary can include certain health-related improvements such as asbestos removal, mold mitigation, etc. Is that correct? So yes, there's a bit of nuance here. Essentially, it is we want to see those health-related improvements tied to the implementation of specific energy efficiency and renewable energy project measures, where there's both energy efficiency and perhaps a regular renovation scope, typically looking at a prorated share of those costs that can be included. And Peter, anything to add on that?
Yeah, I would refer people to the NYCERTA guidance around ancillary measures, but it is important to understand that PACE can finance work that is required for the energy saving work to then be installed. So we will definitely work with projects to think about what types of costs are eligible in the PACE loan.
The next question from Larry, does total cost include NYCERTA or utility financial incentives? So again, it depends a little bit. The NYCERTA guidance is explicit about renewable projects. It should be included. I think we feel the same way about EE projects, energy efficiency projects, that sort of needs to be part of the capital and funding stack that goes into these projects. That said, we do need to determine exactly how that would be reflected in the workbook. So I think that's something that we'll have to regroup internally and kind of get back to folks, but hopefully that's helpful.
I would just add that we would expect the utility incentive to reduce the installation cost of the measures, rather than the workbook showing the full cost and then the utility as a savings. So that's generally the way we'll look to do it. But I think Patrick's right that this program is early days, and we're happy to dive deeper on certain topics and work with project developers about what can qualify.
All right, thanks for that, Peter. From Austin, how will the process work when a project is brought to NYC Accelerator and PACE financing is deemed appropriate for the project? And the follow-on is, will the accelerator submit an RFP or create a competitive bidding process? Peter, do you have a?
Yeah, I could answer.
There?
I think Andrew would be a good resource here too. The NYC Accelerator, those efficiency advisors are meant to be experts on the types of projects that can help buildings comply with the local law. Andrew is a financing expert and has a lot of facility with PACE and has a good relationship with us to refer projects as well. But ultimately, that referral will be to a qualified lender, and then a borrower or a building owner would work with a PACE lender to underwrite and close on a PACE loan. And so the accelerator advisor would facilitate that process, but there would be no competitive or time-consuming RFP or something like that.
Yeah, and I'll just add that, yeah, we're what we would do at that point, we would determine that PACE makes sense for a building. We would make the building owner aware of all of the lenders, and as I understand the different lenders and their different focus and kind of niches in the market, I would share that with the owner, so that, I mean, there's 11 lenders now. There could be 20 before we're done. The borrower's not going to want to go to 20 lenders. So I would help guide them to lenders that would make sense for their building based on their focus, things like size, building sector focus, so we would narrow it down. But, again, they would be aware of all of the lenders, and I would just help guide them to ones that make sense.
Next question from Robert. How closely do the local law 97 emissions coefficients compare with the NYCERTA values for GHG emissions avoidance in the guidance for CBR calculation document? That's a good question. I'm not sure. So we're using the laws or the coefficients that came out as part of local law 97 from the city. I'm not sure how those compare. I don't know if Peter, Andrew, you guys have any insights there.
I could just add a couple things, and I apologize for not showing the NYCERTA guidance during my screen share, but I think it's an important reference for projects when they're applying for PACE financing. So I mentioned related benefits. The NYCERTA guidance has a list of related types of financial benefits that projects can get by installing energy efficiency measures. One of those is the societal benefit of reducing carbon. So that calculation is contained in the NYCERTA guidance, and project developers are free to review that in developing their own savings. And then separately, our workbook calculates avoided penalties under the parameters of Local Law 97. So really, there are two different types of savings there. And thank you, Natasha, for linking to the NYCERTA guidance.
And the second part of the, thanks, Ryan, for clarifying the electric GHG emissions is much lower for 97 than NYCERTA, about half. Okay. And the second part of the question is how are those monetized, those cost savings identified there included?
Well, I think you could, follow the guidance in that NYCERTA has set out. They have sort of a schedule of costs or sort of carbon values. So you could look to the guidance for how to monetize that. And I know we skipped one question about condos, and I think that's
why did you jump in there, Peter?
Yeah, it's a difficult question to answer quickly. I think in a lot of cases, condo owners will not be able to benefit from PACE financing because PACE is only available for commercially owned real estate. So condo units would be considered single-family homes. However, in certain cases where an owner is developing a condo or converting a building into a condo and is the single payer of the real estate tax liability, then that entity could get PACE financing to install energy efficiency measures, and the PACE loan could be paid down incrementally as units are sold to individual owners, so that there's never a single-family homeowner that is benefiting from PACE financing. Yeah, so that's how we would expect it to work. I think there's probably a lot longer of an answer, and I would encourage anyone to talk to one of the qualified lenders or reach out to NYCEEC directly to discuss further.
Luca asked, are there future plans of implementing an emission trading scheme for CO2 certificates for NYC? Would those be included in the SIR calculation? So, guys, jump in here. I believe there is a trading scheme underway that's being developed. I don't think it's clear yet how exactly the mechanics of that will work. Conceivably, if there's sort of net additional benefits available, that would be included as part of a retrofit project. Peter, Andrew, anything else on that?
I just think there's a lot that's not known yet about carbon trading in New York City, but from a policy perspective, PACE is intended to operate alongside that. So you might be able to avoid certain amounts of Local Law 97 penalties by purchasing carbon offsets. And then at the end of the day, to the extent that buildings have to invest in measures to bring them into compliance, PACE would be the mechanism to fund those measures.
David asked, if the host site cannot make use of the 26% federal investment tax credit for renewable technologies, how can PACE financing include power purchasing agreement payment for renewable, typically 10 to 15 years? Whereas the technology supply monetized for the tax credit and then issues a PPA for the balance of the asset cost.
I think we might want to, refer a question like this to one of the qualified lenders. Probably takes a little bit more time than we have on the call, and we wanted to focus today's topic on the technical requirements for technologies. I think there's a few ways that PPAs can be financed using PACE, but I would probably defer to the specialists there. So we have 5 minutes left. We can wait to see if there are a few other questions. Otherwise, Natasha, I might suggest we wrap up. And I did want to say during my portion that the presentation will be recorded and published. So I think really the intention is to make sure that our engineering partners are familiar with the process, familiar with our workbook, and know where to find the right resources. So we would encourage you to, watch this video as you're developing an energy audit, as you're conducting the Technical Certification Workbook for a live project, and hopefully that will be helpful. And you're certainly welcome to reach out to the NYCEEC team at any point along that.
All right, if there are no further questions at the moment, I think it's a fair time to wrap up. We've provided our contact information on the slide here, so if you have any additional follow-up questions as you're going through the process, please do reach out to us. We thank you all for joining us today. Hope you enjoyed the training, hope it was informative for all of you, and have a great rest of the day.
Thanks, everybody.
Thank you.